My guest is Ken Calhoun. Welcome, Ken.
No, glad to be here.
Well, I know foreign exchange markets, you teach traders about foreign exchange. They're known to be very good trending markets. At least that's the press they get. So I guess my question is twofold. Are they really good trending markets? And how do you determine when they're trending and when they're not trending?
Well, that's a great question. One of the challenges that many of my traders have asked me about is that they try and trade pivots, and I try to wean them away from that and get them to trade breakout trend continuations. Typically what we've seen, for example, with the pound dollar this last recent few weeks, is we have trends that usually last anywhere from 2 to 3 weeks in most of the major currency pairs, not so much the crosses, but in our majors we get 2 to 3 week trends. So I like to teach traders how to identify, how to capitalize on breakouts and breakdowns in those trends, and then how to exit before the market takes their money back.
And you use mathematical methods to do this?
Absolutely. There's three different signals I use. One is using the Wilder's ADX, which is a directional movement indicator, over 40. When it breaks over 40 and the currency pair is taking out a new high or low on a 7-day chart, this is for swing trading, which is typically anywhere from overnight to 7 to 10-day round trips. I find that provides a very good momentum breakout or breakdown indicator depending on the trend. That's the first one. The second indicator is using what's called a 3-line break, which is a Japanese candlestick chart pattern. We have the whole real bodies that are sequential, and once those are making a breakout pattern in conjunction with an ADX over 40, that's a particularly strong trend entry method. So that's another technique that I like to share with traders.
So that's also sort of a swing trading technique that could last, 3 to 7 days or so?
Absolutely.
Okay. And do you use this on what kind of time frame? Do you look at the daily charts, intraday, what time frame, or does it matter?
Yeah, it does matter. One of the things that I like to use is a 60-minute. I use the hourly candles on a 7-day. I also like to scan through the currency pairs using the daily annual chart, using a 1-year 365-day the daily charts. One of the challenges that traders have is that they will overtrade their favorite pair. What I like to do is go through, say, a dozen different pairs on the annual chart, see who's taking out a 52-week high or low, then drill down into the 7-day hourly chart, and then use the ADX and the 3-line break to identify the entry trigger. And that works extremely well. It's very consistent, and it does a lot better from what my traders tell me than the pivot trades that people, which is basically trying to fade and outguess the market, which doesn't work most of the time. I like to prefer to use breakout trend continuation, entry, and exit signals to help traders capitalize on the volatile currency markets we have.
Great. And do you have to follow the markets? Can you keep it down to a normal sort of 17-hour day, or do you have to go 23/7?
Good question. For day trading, that's parked in front of the monitors, at least during the morning open. But I prefer to just keep it down to 2 to 3 hours a day in terms of market entry and exit signals. So it keeps it manageable that way. And the wife doesn't complain as much if I'm not in front of the computer 18 hours a day. So
that's a big plus, Ken. Thank you very much.
Well, thank you.